Basically, Bitcoin takes money out of politics.
It's designed to work when we all have guns pointed at each other and we don't trust each other at all.
It's inevitable that large companies, nation states, that everyone will eventually be part of it. And the more important part that a lot of people miss is your opinion on this doesn't actually matter because nobody can stop anybody from using Bitcoin.
If people or organizations or governments end up actually adopting Bitcoin, in a lot of respects, that Bitcoin forces those organizations and individuals to be transparent about what they're actually trying to do. Every Bitcoin goes to Farzad. I am the only person who holds that coin. It's worthless. I know, Constantine, you and I were talking before we went live. It's like there are other things that we might want to talk about too. But before we even get into the deep dive that discussion around Bitcoin and whatever else comes up, so I'll let you guys go through and introduce yourselves from my audience. So we'll start with Constantine and we'll go to Topher. So go for it.
So I'm Constantine. I have an econ background, and as I was getting deeper and deeper into the tangled webs of traditional Keynesian economics, I found none of it ever made any sense. Then I dug into Austrian economics, which is never taught in schools, and everything suddenly made sense. With that background, then I was primed to understand Bitcoin better than your average Joe, and I fell in love with it over time. Like most people, I thought it would be too good to be true, and I kept kicking the tires for years, actually. And as I learned more and more about it, I got more into it. So now I'm here in Austin doing, going to all the Bitcoin meetups I can and helping out wherever I can.
Hell yeah. And then for those of us that are not super familiar with Austrian economics, so can you give us like a simple breakdown on what that is?
Yeah. So Austrian economics, well, it's better to start on Keynesian economics and why it exists primarily. Austrian economics is kind of more what you would expect economics to be. And Keynesian economics was created mostly just to justify the existence of central banking. And so if you go through Keynesian economics, the solution in most situations is to print money to stimulate growth. And we've seen where that's gotten us since we've adopted central banks and Keynesian economics. And then when you look at Austrian economics, you have people like Ludwig von Mises, who is like one of the main founders of it. And they introduced me to concepts like time preference. So like how time preference works is you have, well, I'll get into that later. We can get into that later. But
okay.
suffice to say, it works a lot better because it explains how people work in an economy and what people choose and why, instead of, oh, we need to print money to grow the economy.
Got it. Okay. Topher, go for it. What's your background?
Yeah, so my name is Topher Scott. I basically have a background in IT. I was interested in computers whenever I was a kid. So that's pretty much the direction that my life took. And around 2004 onward, there was a lot of interesting political upheavals going on throughout the Middle East. And so I was interested in the way that the internet worked and the way that dictators would respond to shutting down the internet if it was disseminating information that they didn't like, something that happened during the Arab Spring. Yeah. And so that kind of got me into like, well, what is our backup plan if the powers that be decide that they want to turn off the internet? So I got into mesh networking and decentralization. That was kind of like my first entry point into decentralization, just as a concept. And so I was hanging around in those circles with the cypherpunks for a little bit. And then around 2010, 2011, I got introduced to Bitcoin. Bitcoin came around. And I was just fascinated by it. And I've been into it ever since. So I've always been on the outside looking in with Bitcoin. I never really dove into it too technically until a lovely gentleman by the name of Andreas Antonopoulos introduced me to the beautiful technical side of things. And so that got me hooked. And on, I decided to switch careers. I was originally doing a lot of IT stuff, but I decided to go into programming. And I decided that, well, I love Bitcoin, I love programming, might as well combine the two. The rest is history.
That's awesome. So let me actually, before I even get into the security stuff, I'm like super interested to kind of like get your take on this. And I also want to ask about what's behind you too. Actually, let's start there. What the hell is behind you there? What is that screen doing?
Oh, yeah. So that is like one of my favorite websites. It's called mempool.space.
That's how you know you're talking to a nerd when two graphs on a screen is like, this is my favorite website.
Yeah, we it's interesting because we kind of have this set up at the office. Not on this screen. I kind of put it in the backdrop so everybody else could see it. But we have like this TV in our kitchen over here. This is our co-working space here in Austin. Okay. And so we have a TV by the kitchen, literally by the coffee maker, that has this up there. And we just kind of like stand by the coffee machine and we just look at the mempool and see how Bitcoin's doing.
And so it's mempool? Yeah.
So the mempool is just basically all pending transactions. So you can see, you kind of look at it as all the economic activity that's happening in Bitcoin that wants to get into the ledger. So the blockchain is up top, and it's divided by two. So on the left-hand side are blocks that have been confirmed. So these are blocks that have been settled and everybody's agreed, okay, these blocks are now part of the ledger. All those transactions are finalized. And then on the right is sort of this, it's transactions that are waiting to get into a block. And then this website is sort of it's doing some heuristics to try and figure out, well, what is that block potentially going to look like? Like, what are the transactions that miners would be interested in? It usually just goes by fees, like miners want fees. So the transactions with the highest fees are most likely to get in. So it's just projecting what the future blocks might look like on the right-hand side. And then you can see a little taste of that in the bottom left. So all those little squares, and
looks like your arm the mic arm is blocking that. So maybe, I don't know if, there we go. Much better.
Yeah, this microphone is low. I'm actually not using it. So we'll get that out of the way.
The sham is up.
Yeah.
Go for it.
Yeah. So I guess since this is mirrored, it's on so everything I'm saying is like mirrored.
Yeah.
But for me, on the left-hand side is like, you see just a mixture of different size squares.
Yep.
And those are the sizes of transactions. So transactions could actually be different sizes because there might be multiple people involved in a transaction, like several people getting paid at the same time. So, and also sometimes people slip data into the transaction, which is kind of controversial. But so there's transactions of different sizes, and the website's trying to figure out like what the next block is going to look like. So it's kind of a guessing game. Like, what are the miners thinking about? What is the potential transactions that'll get in the next block?
Yeah.
And then on the right-hand side, you see, what is this? The memory usage. So that's just tracking the size of the mempool over time. So right now the mempool is pretty empty, which is why if you're looking at the graph from left to right, it's sort of crashing all the way down to green because the mempool's pretty empty. But later on in the day, it sort of like mimics just the other financial markets where like during certain periods of the day, like the market's hot with activity. And other parts of the day, it's slow. So right now it's a little slow.
And the mempool, just so I fully understand this, the mempool is it basically the amount of the amount of compute that is currently being used to transact? Is that a good way of thinking about it, or?
I wouldn't think about it as compute. I would think about it as these are just transactions that are floating around.
I see.
So the Bitcoin network, it's a payment network, and so this network is made up of nodes. All these nodes are people running the Bitcoin software on their computer, and they all talk to each other peer-to-peer. So it's like a huge gossiping network. It's everybody just gossiping information back and forth. And so that's how these transactions move around. So what you're looking at here is essentially there's a website. And that website is running a Bitcoin node. And then what you are seeing is the mempool. So the pool of memory that computer has to store transactions that are pending. And then that's what you're seeing for that particular node. But Bitcoin is designed so that we're all in consensus. So even though what you're seeing is the perspective of this particular node, it should be the same, roughly the same, the same thing that everybody else sees.
Got it.
So for the blockchain, for the blocks that are settled, like that's settled. So everybody on the network sees that.
That's where there's consensus, right? Where every machine's like, yep, got it. And then that gets posted to the ledger.
Yeah. So that's set in stone. But the other stuff, like the projected blocks, it's a bit of a guessing game. It depends on every node kind of has like a slightly different view of what transactions are floating around because it's such a big network. And so all that other stuff, it's like you're seeing the perspective of this particular node that's running this website, but it's mostly the same thing that everybody else sees for the most part. So.
Got it. And so the idea behind this, is it just to get a snapshot at the health of the network to see just how many transactions are going through to make sure that there's activity going on? Is that the sort of the overarching thought behind this dashboard?
Yeah, it shows you all sorts of interesting stuff. So if I can take the wheel here, because this is running off of a Raspberry Pi, which is kind of slow. So you got to give it some time to update. But there's like different tabs that you can click on here that give you different metrics. So this other tab is for mining. So what this tab shows you is essentially all the different mining pools or different miners that are participating in the network. That's the pie chart. And then on the other side, you see a graph of the hash rate over time. And so like what's the total hash rate of the network and just how that's been growing.
Got it.
Moving over time.
So that hash rate would line up better with the security budget. Your question about the security budget.
The security stuff. Okay, so we'll definitely come back to that. Okay, so that's super cool. Is that a public site that people can access, or is this like a like homegrown tool that y'all have built?
No, this has been built by somebody in the community. His name's Mononaut.
Okay.
And he's built this tool. He also built another tool called bitfeed.live. Okay. And there's just incredible visualization tools that help you make sense of what's going on in the network.
And anyone can access it? Like if I had the link, I can just access the dashboard?
Yeah, mempool.space. You just type it in and pull it up. Cool. And the cool thing about this is that if you want to, you could host your own. So if you're running your own Bitcoin node, this is open source software. So you can just go out and you can download the software that runs this dashboard. You can connect it to your own Bitcoin node. Cool. And then you can look at this dashboard from the perspective of your own node. And
so that's the decentralized. So that this really highlights the decentralized aspect of the network, which is like there's no like walled gardens behind what's happening, what's being seen. This is like the design behind the whole thing is like anybody can have access to it. Anybody can create their own nodes. Is that a fair representation?
Yeah. So anybody can download the software and run it. And Bitcoin's more of a protocol. So you don't even have to run like a particular software from a particular source. There's actually different implementations of the Bitcoin protocol. So the most common one is Bitcoin Core. That's what everybody mostly uses. Okay. But there's other people have made different implementations. And as long as you follow the protocol, it's like a language, as long as you speak the language and everybody else can understand you, then you're essentially a part of the network.
Cool.
But yeah, it's open protocol, open software. Like you're free to choose whatever you want to run on your own machine.
Got it. Okay. Thank you to the sponsor of this podcast, Rebellionaire. Now, we know a lot of you are Tesla fans and especially Tesla investors. And if you have more than $1 million of Tesla stock, Rebellionaire could be the perfect fit for you. Rebellionaire is an investment firm that helps Tesla investors reach their financial goals. They do this by helping you plan for your future, and they also institute strategies like trimming and adding, covered calls, etc. So if you're somebody who believes that Tesla has long-term potential, these kinds of strategies could maximize the number of shares you have by the time Tesla reaches those goals. And the guys at Rebellionaire do this by doing so much research on the Tesla story, and they do a lot of novel research as well. Things like doing cross-country full self-driving trips to really gauge and truly understand the capability of that specific software. They've done really novel research around the energy side of the business and other parts of the business as well. And so instead of dealing with a typical investment firm that may give you the cold shoulder by viewing your investment as too risky, the guys at Rebellionaire will help you reach your goals while fully understanding the Tesla story. And so if you're a Tesla investor and you have more than $1 million of shares, and you're interested in finding out more about Rebellionaire, I have a link for you in the description in the comment section below. You can go to rebellionaire.com/Farzad, and that's how they'll know that we sent you. And now back to the podcast. Now, let me ask you this, and this is probably going to segue into the secure discussion, because again, like every time I start talking about Bitcoin, it just, so many questions come up like in my head. How are y'all, and I spoke to Constantine about this, I think probably like a month or two ago, when we were just hanging out with the wives, but I'm trying to understand like how do you guys perceive the embracing of Bitcoin by large institutions and the US government putting forward crypto regulation that should benefit things like Bitcoin? And like your giant, like, I don't know if Blackguard and all these other guys, like these giant funds, I don't, Blackguard? Is it Blackguard? What the
No,
fuck?
you mean BlackRock?
BlackRock, thank you. My God, I didn't have enough coffee this morning. But you have all these giant funds that are starting to look at Bitcoin. They just approved, I think Trump, I don't know if they approved it or they're trying to approve it with a executive action to put Bitcoin in 401ks, right? So like there's this embracing of the technology. How are you guys perceiving that? Whoever wants to go first.
I could talk about that a little bit. Some people are really pissed off about it, maybe some of the older people in the space, but my perspective on it and many others' perspective on it is that if you understand the fundamental power of Bitcoin and you believe that it will become a global store of value, probably the largest global store of value and also medium of exchange, then it's inevitable that large companies, nation states, that everyone will eventually be part of it. And the more important part that a lot of people miss is your opinion on this doesn't actually matter because nobody can stop anybody from using Bitcoin. So you kind of have to take that view, even when it comes to US government, even when it comes to, whoever, China or large companies gobbling up tons of Bitcoin.
Fascinating.
Yeah. And so it's just important to keep that even perspective. The major caveat I would have to that perspective is you do need to understand the differences between having, for example, a BlackRock Bitcoin ETF in your 401k and actually owning Bitcoin. Those are very different things. The biggest difference being, for example, you get price exposure by having it in your 401k. And if you have money that's trapped in a 401k, then that is probably a pretty good use of that money if you don't want to take the hit and get that money out. You can't send it anywhere. You can't take it with you. You have no control over that Bitcoin. It's not actually Bitcoin. And so we refer to that as paper Bitcoin. And the bigger issue that can happen as well is that if they're not proving on chain that they directly control the underlying Bitcoin, then you just sort of have to trust their word that they have the Bitcoin that they say they do. And with Bitcoin, in contrast to something like gold, it's very easy to check for yourself from any Bitcoin node who has what or which addresses hold which coins. And so, when Trump was first getting into office, people were all pushing for the auditing of Fort Knox, which kind of disappeared magically.
I wonder why.
And so that is, I think they maybe tried an audit back in the 70s. I don't know actually what happened with that, but ostensibly like nobody knows what's up with US's gold or any country's gold. And yet with Bitcoin,
I have theories.
Yeah, me too. But with Bitcoin, it's at least possible to cryptographically prove your ownership of coins at every 10 minutes.
Fascinating. Yeah. So this is like if I'm going to use a sort of like a some sort of example to try and explain this for like my dumb brain is you run the risk, like in the case of gold. I think I forget what time period we had this issue. We probably had this issue multiple times in different countries, but the government says they have X amount of gold and the currency is backed by X amount of gold. They print the gold and then they start assigning paper currency or paper against that gold. But it turns out that when they actually go check the gold, they're massively overprinted against that gold, and it creates this implosion of the currency. This is similar to what BlackRock could be doing with Bitcoin. It's like they might be assigning shares of Bitcoin, right, but if they're not actually holding onto the Bitcoin, they might have an issue where they can't actually pay out the people because they don't have the Bitcoin to back up what they're actually selling.
Exactly. Yeah. So the major date that most people use is 1971, which is when Nixon took off the gold standard officially.
Yeah.
And at that point, if I remember the story right, I believe France even sent like warships to New York Harbor to like get their gold back. So there's like it was a big deal.
Most gangster thing France ever did.
Ooh la la.
and so that's honestly the biggest issue with gold that Bitcoin fixes. And sometimes people will refer to Bitcoin as digital gold for this reason. Gold has a lot of really good properties that made it a great store of value for thousands of years. But the biggest issue with it was the portability of it. You know, no one wants to walk around with a bunch of gold in their pocket. And if you're trying to store your wealth in gold, well, now you have a bunch of gold bars in your house somewhere and you're a big target. It's just not very portable and it's not easy to secure. And so what ended up happening is you end up having people store their gold in banks and then getting receipts for their gold in the bank. And those receipts are what became our money. So that's gold-backed money, gold-backed currency. And suddenly the bankers realized, oh, well, most people don't actually come to get their gold. They're just trading the receipts amongst themselves. So why don't we just make more receipts? And that's how you started getting the system where we're at. And then they said, just don't worry about the gold anymore in 1971. Right. And yeah, that's inevitably what will happen if you centralize the underlying assets in one location for security reasons or convenience or whatever.
That makes perfect sense. So you just gave me another aha moment with Bitcoin that I didn't currently, like another light bulb went off with me. So the previous conversation I had with CERN, the huge light bulb that I got is that Bitcoin, the way it's designed, will never be debased, regardless of what happens, because of how the network is set up. So like, and the example we used was like, even if, like, let's say we were backed by gold, okay, with enough technological improvement, we could land on a freaking asteroid that has gold, and all of a sudden, you've devalued gold because now you're pumping new gold into the system. So like with enough time, you're going to have that issue. With Bitcoin, you have a set number of coins, and it's digital, and you can't make more coins in theory. And we'll talk about the sort of security behind it too. But so the other thing you just made me, that another light bulb went off, is around transparency. So with gold, you have to trust. You have to just take the word of, like, for example, the US government with Fort Knox, right? With the gold. We're like, go audit it. They're still not auditing it. And they don't have to really audit it because what can they say? Well, I have all the weapons. What are you going to do about it? Do you really want me to go, So we just have to trust that a collection of humans are telling the truth. And there's no physical way for us to go into the place and be like, you are telling the truth. Whereas with the Bitcoin network, anyone can verify if you're telling the truth. Is that a fair representation?
It's a very fair representation. There's a very common saying amongst Bitcoiners, which is don't trust, verify. And the way you verify is by running your own node. And then you can be sure that the coins you're receiving or the coins you're looking at or the coins you're sending are where they should be. And you're sending it to where you want it to go.
Got it. So it forces transparency in a lot of different ways. Like it forces, like if people or organizations or governments end up actually adopting Bitcoin, in a lot of respects, that Bitcoin forces those organizations and individuals to be transparent about what they're actually trying to do, right? In some ways.
In theory, as we've seen amongst the biggest holders of Bitcoin, like BlackRock, unfortunately, and Strategy, which used to be called MicroStrategy.
Shout out
They
Michael Saylor.
they have chosen to not give what we call proof of reserves. And I don't know if BlackRock's even looked at it, but I believe there's another ETF that actually does provide proof of reserves. But Strategy has said several times, Michael Saylor said many times, that they have their reasons for doing so as a publicly traded company, that, if they're moving their coins from wallet A to wallet B, they don't want to like trigger a mass sell-off of their stock or whatever, or cause mass speculation about what they're doing. But because Bitcoin is an open ledger, there are third parties that have basically done the work for them. And so we have a pretty good idea about which coins are actually belonging to MicroStrategy. I'm not sure if the same has been done for BlackRock, but my point is, it is a forcing function, but at the end of the day, the person who actually controls the coin, or the organization that actually controls those coins, has to actually post that information publicly.
Got it. And that's because the wallets are anonymous, right? Like the unique identifier, in theory, it should be anonymous.
They're like pseudonymous.
Okay.
They're at the end of the day on the ledger, it's just an address and it's just a public key. So it's just a string of characters that represents your the public part of your password that you're allowed to share with people to sort of identify who you are. So that's all that's ever tied to the money. But if you choose to associate that with an identity, there's a way that you can do that. Then it's like a proof positive, like, oh no, this is the person. I can give you some sort of proof that I control the money. There's also like doing what's called chain analysis, where you don't know for sure if the money belongs to a particular person, but you can kind of look at what they're doing in public, and you can look at how the money moves. You can try and correlate those two things.
Got it.
So it's pseudonymous in that way. Like, you can choose to reveal yourself. You can choose not to. You do have to like take care to protect your privacy. It's not just given to you for free. So you do have to like take care that your whatever economic activity that you do. Like, so if you go to Amazon and let's say Amazon accepts Bitcoin and you buy something on Amazon, like Amazon can see, well, this transaction for this amount happened at this time. This key on the ledger must belong to this person.
Got it.
There's ways to correlate them. But yeah, so that's kind of like where privacy sits with Bitcoin. You sort of have those choices. You can choose to work to stay as anonymous as possible, or you can choose to reveal yourself. And then there's like or you can be in between.
So would it be fair to say that organizations that are able to track transactions that are tied to a user profile that take Bitcoin, do they have an easy way? So is it fair to say that those companies have a very easy way to identify who is who based on those transactions?
It depends on who the subject is and how cooperative they are. So like if you want everybody to know your financial activity, then you can make it simple and just reveal to everybody, these are my keys, these are my addresses, and feel free to track that money as it moves around. But you can also try to obfuscate that as much as possible. So you
make up like a random user for Amazon as an example. That's not actually you, but it's it's some Joe whatever, but it's not really Joe whatever. It's me. So they're like, oh well, Joe whatever is doing this transaction on Amazon, at 10 o'clock every morning, buying toilet paper or whatever. So using Bitcoin, so it's obviously going to be Joe whatever, but Joe whatever is not really me. It's Joe whatever. It's just made up person.
Yeah, and there's like a whole rabbit hole you can go down with like how to use Bitcoin privately.
Interesting.
Yeah, it takes a little bit of work. It's not something that's given to you for free.
Okay.
But I like it that way. I actually think that it puts Bitcoin in a strong position. I think that part of what made Bitcoin so popular is that you can choose to be fully transparent, and like the ledger is fully transparent by default, but it's pseudonymous. So there isn't really any identity tied to any one of these addresses. But there isn't a lot of technology built into the base layer, into the protocol itself, to obfuscate like who's who.
Got
So
it.
you can choose to be as transparent as you want, and you could also choose to obfuscate things as much as you want.
That makes sense. Okay, got it. Now let's talk about the one thing that the one big thing that I was sort of hung up on the CERN discussion, and this is around this concept of like they. So there was this thing like where we're talking through, and in CERN's presentation it was sort of like this group of developers, this group of people, this sort of like the big brain chads. Okay, that's what I'm going to. The big brain chads that have hooked up to the protocol, have created all these tools, have can actually go in and make changes, which I don't really understand what that means. So I don't know who wants to take this one, but can you all help me understand who they is and what is that? How is that different than the Fed? So let me sort of like walk you through high level where I'm stuck. So the Fed is this group of people that basically control the money supply in the United States, for better or for worse. How people define it differently, right? But they can make interest rates 20%, the economy stops. They can make interest rates 0%, the economy booms. They have a lever they can pull where they can say economy fast, economy slow. But it's a group of people, it's a very small number of people that essentially control. And I don't even know, are they elected even? I think they're unelected, right? Am I right in saying that? A lot of these Fed chairs?
I think like the president has some power to decide, but no, they're like the Federal Reserve is a private organization.
Yeah.
They're made up of a board of bankers essentially that represent like the private banking interests across the US. But yeah, they're very secretive. And I think the US government has some limited powers in how they elect certain people on that board, but it's not like the US government has full control over the Federal Reserve. It's not a branch of government. They operate independently.
Yeah, and we see the whole thing between Trump and Jay Powell, right? Like they're, I'm going to fire him. Oh, he's a great guy. He has a hat on, right? Whatever. Anyway.
Yeah, they don't even have to say that they're going to pull the lever. They just kind of hint, like maybe I'll pull the lever and maybe I won't.
Like today, Jay Powell was like, oh, that was a very unusual jobs data. We may have to lower interest rates. Like, why is this a game? Okay. Anyway, don't even get me started. So that's the Fed. But then with the Bitcoin stuff, there's this group of developers, whatever they is, I'm assuming y'all know they pretty well. It's a group, a consortium, whatever you want to call it, of individuals, private individuals that are able to make changes to the Bitcoin network or make upgrades or whatever. So help me understand that dynamic and why is it different than the Fed, where there's just a bunch of randos basically that control the banks in the United States that get to make decisions around the economy. Who wants to take this potentially 7-hour long explanation?
Oh, I have a short answer. There is no they. There really is no they.
So help me understand.
So like when you choose to run software on your computer, that's your personal choice. And nobody can force you to run software on your computer. So Bitcoin, let's talk about Bitcoin Core, because you brought up like the Bitcoin Core developers and they have the keys to make changes to Bitcoin Core. So Bitcoin Core does not have software updates, automatic software updates built in. So there's no concept of automatic software updates. And that's like by design, like it's been in the culture of developers that work in Bitcoin that whatever sort of Bitcoin software that you make, do not add automatic software updates, because every time you download even a new version of the software, you're potentially changing the rules that you're running on your machine. And that is a very conscious decision, and everybody should have their own freedom to make that decision. It shouldn't be taken from you, because that's essentially your vote. Like you're helping create and expand the Bitcoin payment network by choosing to run whatever version of the software that enforces those rules. And so Bitcoin Core developers, like they can choose to update the software as it's hosted on a website. This would be GitHub. This is a website developers use to host code and to collaborate on it. So they can choose to make changes to the code that's hosted on that website, but that has nothing to do with the software you're already running on your machine. So you still have to make a conscious decision to so if they change the software, they make an update, you have to decide to download that update and then update your software and then run it. And they have no power to make you do that. If anything, like there's been a lot of contention recently because the core developers have been making changes that a lot of people don't agree with. And so people are just choosing not to update, or they're choosing to run what's called a fork. So another cool thing about open source software where like the code is out in the open, it's published publicly, everybody can see it. You can see the secret sauce. There's no hidden tricks. It's like you can see everything and how it runs. People can take that and they can fork it, meaning they just copy it, but then they choose to start making their own changes. And so it's like the two projects diverge. You can just copy the project and start making your own changes. So yeah, if the developers that are maintaining Bitcoin Core start making changes that other people don't agree with, they can just choose not to upgrade.
Interesting.
Or they can choose to copy the project and make their own version. Or and other people have decided to do that. Like there's an alternative implementation called Knots, and there's other implementations too. Like there's more than one version of the Bitcoin software. Like people have made different implementations of it, and that's your vote. Like you can choose to run any different implementation, any version that you want, as long as you have consensus to where everybody's running the same rules. Now there are.
What is consensus in this case? 51%? Like what's the threshold?
No, so that's consensus is that everybody's following the rules, and there's no like 50,
everybody
49. There's no percentage on it. It's either you're following the rules or you're not. There's two different domains of rules. There's the domain of the blockchain. So these are rules that dictate like how the ledger is maintained, like the money supply, how Bitcoin is issued over time as a reward, like all those sorts of things that actually affect like the economics of Bitcoin. There's that rule set, and that rule set's set in stone. Like that, it takes a lot to have to implement a change in that kind of consensus. And so if you make like an extremely if you make a change that just disagrees with everybody else completely, that we call that a hard fork. So you're just essentially running a different version of Bitcoin at that point. And we've had hard forks in the past. So like Bitcoin Cash was a hard fork where there was just like a disagreement on the size of the blocks. Like how big can a block be? We just had a simple disagreement on that. But it was a fundamental rule of what the size of blocks are supposed to be. And so because this group of people just vehemently disagreed with what that size should be and how that should be determined, they made a change to it. And they essentially created a new version of Bitcoin. And so now they're all off in their own world with their own version of Bitcoin. And it's completely different than the version of Bitcoin that you and me use. And so they're on separate trajectories.
Let me drill down on that 1 second. So that different version of Bitcoin, is that still Bitcoin? So like when I think about the total market cap of Bitcoin, is that a subset of that total set, or is that just its own thing now? It's its own blockchain. Like if I want that different version of Bitcoin, I literally have to buy a different kind of crypto versus what we all know as Bitcoin.
Yeah, it's like a completely different network, completely different blockchain, different ledger.
So when you say you fork something, it's a different network entirely.
That's a hard fork. That's a hard fork. Yeah,
Got it.
That's where it becomes like a completely different thing.
Got it. And so that hard fork could be like, let me just make a stupid example here, but there is a theory. Theoretically, I could be one of those developers or whatever, and I can be like, okay, from now on, every Bitcoin goes to me, and I can make a hard fork. It's like, okay, well, y'all don't agree. Fuck you. I'm going to make my own fork. I can make my hard fork. Every Bitcoin goes to Farzad. I am the only person who holds that coin. It's worthless. Is that a good way of thinking about it?
Yeah, you could do that. You could absolutely do that. You can double the supply. You can just give coins to yourself. Yeah, you can change the rules however you want. There's no guarantee that anybody's going to follow you.
Got it. Okay. So this is fascinating. Okay. So when I hold a Bitcoin in my wallet, and there's forks happening, okay? How do I know which fork that coin sits on? So like, help me understand that.
Yeah, well, in order for there to be a fork, you have to change the rules. And so in order for the rules to change, you have to make some change to your software. So if you do nothing, if you just sit there and do nothing, then you will never follow any other fork, because you have to change your software in order to follow along with that new version.
Got it. And so, wow, this is really a freaking rabbit hole, isn't it? So then if I'm, okay, let me use Coinbase as an example. So Coinbase is the biggest, it's the biggest, is it the biggest sort of exchange for cryptocurrency? Is that
maybe Binance. I don't know. It's like either Coinbase
Top
or
3.
Binance.
Yeah. One of the biggest ones in the world. Okay. So let's say I have Bitcoin with them, and I have, whatever. I have 0.1 Bitcoin with Coinbase. Okay. So that's technically their Bitcoin that they're holding on my behalf. Okay. They can decide. So theoretically, they could decide to fork, to update their software to go off of some sort of fork that happens, that Bitcoin sort of transmutes or transforms into that new fork with the new rule set. And the new rule set is only valuable if everyone else agrees that that's the new rule set. Is that a fair way of describing that?
Yeah, and that it's not even a hypothetical. So this has happened.
Okay.
When this disagreement happened, this was over a soft fork. So a soft fork is a little different than a hard fork, whereas there doesn't have to be a split, where you can sort of just add restrictions, and it doesn't necessarily kick. So the people that choose not to upgrade, like, it doesn't kick them off of the network per se, but they don't understand like the new changes. But those new changes still follow along with like what are the hardcore rules, like the total money supply cap, the issuance. So it's like hard rules don't change, but there's some little rules that you can change. Like maybe you're a little more restrictive on what transactions will look like. And so the older nodes, they will still see the new transactions as valid, but maybe there's like a couple things that they can't get into the blockchain anymore because the miners have upgraded to a new version, but they haven't. So there's like hard forks where it's a complete split in the network, and now you have two different ledgers. There's a soft fork where you can add some restrictions, and it doesn't kick the people off that haven't upgraded. But as long as the miners upgrade to the new version, then it's like you can't get like older versions of transactions into the blockchain. It's only newer versions of transactions. So that's like a soft fork.
Interesting.
And then there's mempool policy, where it's like, this has nothing to do with transactions that go into the ledger. This is just rules around how transactions circulate throughout the network, like in the mempool before they get into the block. So pending transactions, there's like rules around how pending transactions circulate. And that's like mempool policy. So those are like the 3 areas of consensus. There's like hard fork consensus rules, soft fork consensus rules, and then like mempool consensus rules.
Got it.
And so when it comes to, so we had this issue with like how big blocks were supposed to be. And it was such a contentious issue that it turned into a hard fork between Bitcoin and Bitcoin Cash. So like this group decided that we're going to change the rules. We're going to change one of the hard rules. And so this is going to be like a complete split. And what happens is that it's a fork in the road. So it's all of the history of Bitcoin goes with the fork. So it's like when that fork happens, everybody essentially they still have their Bitcoin, but they also now have this Bitcoin Cash, because the ledger just copies, like it's just a copy of the ledger, and then it diverges. So everybody kind of gets two balances. They have their Bitcoin balance, and now they have this Bitcoin Cash balance, which does just come out of nowhere essentially. And so what happens at the exchanges, because Coinbase is sitting on your Bitcoin, they're running the node on your behalf, they're holding your Bitcoin on your behalf. So they essentially get to vote. And so what happened is Coinbase actually, they supported both forks. So they gave you, you still had your Bitcoin balance at Coinbase, but then they also gave you a Bitcoin Cash balance. And so now you suddenly have this Bitcoin Cash that just came out of nowhere and it's just sitting there. And
because they chose to upgrade their node with that hard fork.
Well, it's not that they upgraded their node; they just ran both nodes.
They ran both nodes. Okay, got it.
Yeah. So they copied the node and they upgraded that copy, and so they were just running both versions.
Got it.
And so you had a Bitcoin balance, and then you suddenly had a Bitcoin Cash balance, and they were selling both. So they created a market for both coins. And so what happened was, well, if you believe in Bitcoin and you think Bitcoin Cash is going to fail, then you're going to sell all your Bitcoin Cash and buy Bitcoin. And then likewise, if you believe Bitcoin Cash is going to be the one true coin that rules them all, then you're going to sell all your Bitcoin and you're going to buy more Bitcoin Cash. And so what Coinbase did at the time is they created this marketplace, and other exchanges participated too. They created this marketplace where people could vote, like literally vote with their wallets and say, no, I'm moving all into Bitcoin, or I'm moving all into Bitcoin Cash. And so, yeah, the price just fluctuated as this was all getting fought out, like which one was going to be the winner. And in the end, Bitcoin won, but Bitcoin Cash is still around. Like I haven't really looked at what the price of Bitcoin Cash is.
I think they recently had like the hash rate drop to near zero, like a week ago or something. I don't know.
Well, I think that was Satoshi's vision. So there was another fork called Bitcoin Satoshi's Vision, and like they were doing their own thing. It's forks all the way down.
Wow.
But if you just do nothing, if you just sit and do nothing, then you're just always going to be on the same version of Bitcoin.
Got it.
You don't have to follow any of these forks.
Got it. Wow. Oh, this is freaking wild. Okay. So let's walk through a hypothetical then. What kind of effort would be required for, let's say, a not even a malicious player, but a player that is doing something to the Bitcoin network that's going to actually weaken it in some way? Let's say they decide to actually. Well, let me ask this question first. If there's actual consensus, could there theoretically be more Bitcoin than what is originally planned? I think by 2150, the last Bitcoin is going to be mined or something. So there's a static number of Bitcoin. Could there theoretically be a change made to the network that says, okay, we're actually going to double the number of Bitcoin? Like the actual thing. Is that a legitimate change that can be made to the thing?
Well, so you would, so let's go back to the Bitcoin Cash example. It's like not only would you have to make that change, but you would have to get everybody to follow along with you. And you would have to be the winner over time because in the marketplace, because it could be that maybe you're winning initially, but then in the long run, you actually lose. And the people that stuck with their beliefs and held on to their unchanged Bitcoin, like they might end up being the winners in the end. So there's no guarantees that like the rest of the world is going to agree with you, or if they find that sort of change is worth it in the long run, because at the end of the day, like Bitcoin is meant to be a tool. Like it's a tool for preserving your wealth and doing digital payments in a way where it's completely decentralized. There's no central parties. You're free to use the money as you see fit. So if doubling the supply of Bitcoin was seen as actually like it brought more value to Bitcoin in a way where as a utility, it was more useful because you doubled the supply and everybody agreed with it, then we would just all be using that new version of Bitcoin. But I don't know how you would make that sell, because part of the value proposition of Bitcoin is that the supply doesn't change. So for you to change the supply, it's like, what is the value at there?
Yeah, just one little quip on that is just with that specific example, you're asking everyone holding Bitcoin to do something that almost guaranteed to hurt their economic interests. And so generally, as you'll go through these different like attack scenarios with Bitcoin, you'll find that the incentives all focus on helping the network. Like even if you're talking of like a 51% attack, like in almost all scenarios, it's just better to mine the Bitcoin instead of attack Bitcoin.
Got it. Okay. So this is super fascinating. This again, another light bulb has gone off. You're literally voting. There's literally voting happening by deciding which forks and which upgrades you want to latch onto, and over time in the marketplace of Bitcoin or whatever these new versions are, eventually, if as long as it is truly decentralized and there are millions upon millions, tens of millions, billions of people that have Bitcoin, they get to decide, okay, I want to take this fork or I want to take that fork. I want to take this fork. This one's more valuable. That one's more valuable. The versions of Bitcoin. This I like the one with bigger blocks is better. The one with smaller blocks is better. Oh, the one that actually is going to make the number of Bitcoin 20% larger instead of where we're at now over time. Okay, I want that one. Oh, the one that is actually going to increase the number of doublings or halvings or whatever that happens on the Bitcoin network. Oh, I like the one that actually halves Bitcoin instead of. People have to come to a consensus over time, and then the one that has a consensus is the one that sort of it's like evolution in a sense. Like Homo sapiens ended up winning, but we all came from one thing like millions of years ago, and then we ended up winning, and we are the fork that won. And Bitcoin is designed in the same way. But instead of like evolution being the driving force, it's people voting on which version of Bitcoin they would want to see survive over time.
So theoretically, that is true, but like Topher was saying, the default is no change, and getting
you have to force people to change.
And so in getting hundreds of thousands or millions or even billions of economic actors to agree on anything is extremely difficult. And so that's why we also see over time, as even if we want to do somewhat simple to medium level upgrades to the Bitcoin network that most people agree are good, even those are very difficult to get through. And it's only going to get harder and harder as Bitcoin continues to decentralize. So in reality, it's trending towards staying how it is, unless there's like a major catastrophic issue where things need to be changed for the health of the network.
So let me walk through a hypothetical. So what if, total hypothetical, the AI revolution takes hold? You got 5 or 6 people, Sam Altman, Elon Musk, Michael Saylor, BlackRock, and 3 other players. They start controlling the means of production because they can make all the AI and all the robots, and they start making all the fucking money. They're just massive engines of economic prosperity. They somehow see that Bitcoin is the best path for them to, I don't know, whatever. Like this is, again, a hypothetical. Control the currency of the world, sort of like preserve the wealth, whatever you want to call it. And then it over time, like saying that in the next 50 years or whatever, 80 to 90% of Bitcoin is held by like 5 organizations or individuals, let's say. What is stopping those people, those 5 players, from coming together and being like, you know what, we're going to make Bitcoin work like this? Is that a risk to the network?
So there's a common misconception that you kind of laced in there that I'd just like to dispel. Having more coins doesn't actually give you more power, which is a very important thing to realize. Just because you're MicroStrategy or BlackRock or whoever, you get the power to sell your coins once, in which case, you could definitely drop the market for a while. But in some ways, that would actually relieve some fear in the market because, now they can't do anything in the future. So it's not like, Elon and BlackRock getting all the coins can like say what the network will be. Like Topher was saying, that's actually dictated by the nodes, not who owns which coins. But to follow with that, a similar scenario that could actually be realistic is you're talking to CERN about quantum. And that is a legitimate threat. People are working on it, but once whatever the Bitcoin community agrees is the best solution overall to deal with that issue, that will require a hard fork. And in that case, I believe CERN was mentioning Bitcoin would probably not be the number one target if you had a quantum computer. Like you'd probably go for nuclear
after Wells
codes
Fargo.
or exactly. It's definitely somewhat high up the list, but hopefully we'd have some window to react. And that's why they're working on it now as well, because this will become a reality at some point. And so that would require a hard fork. But in that situation, most of the people who hold Bitcoin want Bitcoin to continue in a post-quantum world. And so hopefully that won't be too difficult, but that's definitely one of the actual risks that Bitcoin faces, as well as every other bank and company and, service that uses any sort of encrypted data.
So let me walk through it like a hardcore example there, like an actual hard example. So quantum is on the cusp of becoming reality. Quantum computing, which is going to allow, basically, it's going to solve cryptography. Our current state of the art cryptography is going to get just destroyed because quantum computing is just going to be way better at cracking that stuff. So and then that quantum computing could allow malicious people to just steal everyone's Bitcoin. Let's say, I'm just going to steal your Bitcoin. I'm just going to take your Bitcoin, right? So for you to be able to not have your Bitcoin stolen, you would have to upgrade the software of where your Bitcoin is sitting on to be resistant to quantum computing. So you would have to take an action to protect yourself. Fair?
Yes, definitely. And
got it.
It's just important to note that there are quantum resistant cryptographic algorithms that exist today. So it's not like there's like no possible solution and we need to figure out, how to even fight quantum necessarily, but we do need to figure out how Bitcoin is going to attack that problem, which algorithm specifically and how the whole thing will happen. And it's going to take time, and it is a real problem that very smart people are working on.
Yeah. So what is stopping an individual or group of people that have proposed an upgrade to the network or the node or whatever, that's this one's quantum protection, but then they're sneaking something underneath that could be detrimental to the network? What's the likelihood that could happen?
Good luck. You know how many eyeballs are on the code? All code changes that get introduced into Bitcoin are under incredible scrutiny. You have thousands upon thousands of eyeballs looking at that code, me included.
You have a bunch of autists out there just fucking going through every line.
Yeah.
Okay, perfect.
And it's such a grueling process, getting changes implemented to the protocol, especially hard fork changes where you really need everybody to go along with it. It's a very grueling process, and it's all out in the open. It's all fully transparent. There is a sort of a technical barrier. So if you're not that technically inclined to participate, then you don't know what's going on. It just looks like a bunch of wizards whispering spells to each other.
Yeah.
But I mean, that conversation is happening. And it's pretty public. And there's plenty of people out there that can sort of decipher what's going on and spread it to the masses. But that's actually in my mind, that's the bigger issue. It's not quantum computing breaking our current cryptography or at least the specific cryptography that we use for Bitcoin. It's more that it becomes a weapon that opportunists can beat you over the head with.
Got it.
To spread fear, uncertainty, and doubt. That has a far greater impact than what we'll actually need to update or change.
Gotcha. That actually makes perfect sense.
Because cryptographers are very forward thinking. And so we already have backup plans laid out, just ready to go in case shit happens.
So that is incredibly helpful for me to get my head wrapped around this, for sure. So what's becoming clear to me is that I didn't really quite understand it. When we're saying decentralized, what it really means is that you have a lot of people that have to agree that this is the thing that's going to keep going to be happening to Bitcoin. And over time, there is a battle to see which one actually wins. And that's the one that will actually win based on what everyone agrees is going to win. So by default, it's a very democratic way of deciding how we should actually store value, or what is the function of Bitcoin? It's not like, and that's how it differs from like really any global currency, where there is one body that makes a decision on how it should function. Truly, the people decide how it should function, and the ones that end up adopting that decide how it should function. Because by default, if, like, let's say one body, let's say those 5 players that we talked about, end up hoarding all of Bitcoin and all the nodes or whatever, and they're like, yeah, we're going to start using this, the value of that plummets, because there's no more functionality with that thing, right? There's no more functionality. There's no real value to it anymore, because it's not actually serving a purpose for the population. It becomes a useless thing. And so people will just move on to something else, even if they wanted to hoard everything, right? So that's now has been crystallized in my brain, and that helps me. Yeah,
I want to add something to that. So you said that people have to agree.
Yeah.
The way that I like to think about it is that if people agree, if we all agree, then there's this emergent thing that comes out of it, which is this.
So if no one takes any action, nothing happens. It just keeps going, right? So you don't. Yeah. So that's a beautiful way of putting it. Like, it
works out of the box.
Got it. You're not going to be left behind. There's zero chance of being left behind.
And so there's zero chance of being left behind, because every new version of, for example, Bitcoin Core or any other implementation, they're always backwards compatible. So you're never going to be like left in the dust just because you didn't upgrade. But one important thing to realize as well, and this took me a while to fully understand, but from my econ perspective, it really clicked for me, is that the defaults that Satoshi set up were basically all on hard money mode. Like, he went the most extreme hard money option in every possible category. A couple of, like, for example, as far as the scarcity, durability, divisibility, I pulled up, I had a chart of all this, but the verifiability, fungibility, resistance to censorship, across all those metrics, like, he chose the hardest, most secure possible option. And so if everybody agrees, then it can change from that, but the defaults are extremely, extremely good. And you'll see across a lot of altcoin projects, or how we like to call them, shitcoins, is it's impossible to beat Bitcoin, but you can make different trade-offs on those different categories. And so typically that's what, they'll use for their marketing. But if you want the hardest possible money, that's what Bitcoin is. And that's what it does best and better than any other money that humans have ever created.
Fascinating. Super, super interesting stuff. One of the other things that CERN brought up was, in the age of artificial intelligence, we're going to have agents doing most of our work in theory, and agents will need to transact in some way. And our current methodology of transacting, seems extremely slow, outdated. You still have to wait for banks to settle, and it takes so much time. And they're basically working out of glorified Excel spreadsheets. That's really what the digital dollar, it's just a number in a database somewhere. And you have to trust that the bank has it right. And
well, to be fair, this is also a glorified spreadsheet.
Fair enough.
We all figure out what the spreadsheet should be.
That's very fair. That's very, very fair. So is there a use case? So is it fair to say that a decentralized network is better equipped for the age of artificial intelligence than what we currently have? And is that going to drive adoption of Bitcoin? How are you guys thinking about that?
Obviously, we're biased on this topic, but it does seem like it is the easiest possible way for AI agents to start transacting and exchanging value with each other. There's no API integrations that need to be done. There's no gatekeepers that can block them from doing anything. And so for some reasons, it's definitely the obvious choice for AI to use for transactions. And that's why we assume that's what will happen. But at the end of the day, we're going to have to see what the AI chooses, right? It's kind of the scary part.
So there's this saying in Bitcoin that Bitcoin is designed to be the money of enemies. And the meaning behind that saying is that like Bitcoin isn't designed for it to only work when we're all friends transacting with each other. It's designed to work when we all have guns pointed at each other and we don't trust each other at all. Like I think this guy over here is a scoundrel and he will screw me over literally any chance that he gets. But we still trust Bitcoin because not that we like trust some third party that controls Bitcoin, but just we trust how it works, that we trust the mechanics of it and how it works, that we know that if I use Bitcoin and even my worst enemy uses Bitcoin, he can't use Bitcoin as a means to screw me over. So it's designed to be the money of enemies. And I feel like that's also why it will be used a lot with AI, because like AI isn't going to want to deal with like what we call meat space. So like we have cyberspace, but we also have meat space. And so Bitcoin exists in cyberspace. But if I wanted to make a traditional payment, like even if that payment starts off as being digital, like we're using PayPal or Cash App or something, like it traverses into meat space because it's going to go to my bank and then they're going to have to call your bank. And there's probably, and if we're in different countries and there's like multiple banks involved, and if there's any issues with the payment, like that will then have to go through the legal system and there could be different jurisdictions. And that's all in meat space. That's all people having to deal with people to get your payment routed. Whereas with Bitcoin, it's purely digital and it's based entirely off of mathematics. So you don't have to worry about the arbitrary decisions of any person along the way. It's just math. And because it's math, you're really just limited by the speed of computation. So you can settle payments very, very quickly from anywhere in the world. And you have finality. Like it's not like dubious, like, is my payment going to go through? They promise that it's going to go through, but then it might get reversed. So you don't really know if it actually went through or not. In Bitcoin, as soon as that block ticks over from one side to the other, it's final.
Yeah.
And you can like maybe wait. And as you wait, it becomes more and more and more final because as more work stacks upon like wherever your transaction is in the blockchain, as more blocks are added on top of it, it becomes more and more and more finalized. And so that is like, and that's tangible. Like you can prove that yourself. Like if you are a developer like me, you can literally jump into the code and see how everything works. But if you're an AI, like that's something that you do second nature. Like AI it speaks the same language that software does because it is software. So it's just like that even if you have two AIs that are run by two different countries and two different jurisdictions that are enemies with each other and they could maybe conspire to screw with each other adversarially, they would still want to use Bitcoin as money. Because what other money system would you trust to be able to do a transaction?
Got it. And it's fascinating too, because a lot of, if you think about the US and its stranglehold as the world reserve currency, every decision that the United States make, like how many times has the United States made a monetary decision to try and weaken its adversaries? Probably more than we think, right? And so those
sanctions,
adversaries,
like we do economic sanctions all the time.
Yeah,
we literally kicked Russia out of the central banking system. We banned them from SWIFT.
Yeah,
just like that.
Yeah. And that's literally the president of the United States can make that decision like that, and then all of a sudden that country that would have piggybacked on the central banking system, which is US dollar denominated, basically, they get screwed because one individual, I mean, of course, like, and then the opposite argument is like, well, you shouldn't have gone to war with Ukraine. Okay. But it's like, but then a malicious world power, and I don't want to get into politics, but let's say it could be for the smallest thing. It's like, oh, you didn't agree to sign this paper, I'm going to kick you out of SWIFT. And then all of a sudden the country's going to be like, what the fuck? Like, how come, what's going on there?
So you bring up a good point, and basically Bitcoin takes money out of politics. Like it is a you could say it's like a political decision to opt out and run your own Bitcoin node and go down these Bitcoin rabbit holes. Like you could say that is political, and in some ways it definitely is. But it's basically saying that money is too important of a fundamental thing to be controlled by any particular government.
Got it. Makes perfect sense. Okay. Constantine, you had a couple things you wanted to bring up that you thought needed to be discussed. Go for it.
Well, it was the main thing. We were talking about the quantum already. I won't belabor that point. But the one thing that CERN was a bit unsure on was the 51% attack scenario.
This is like my favorite topic.
I wasn't sure how feasible that would be, especially at the current hash rate, because hash rate is extremely high right now.
So before we go into that, so rehash the 51% attack scenario.
So essentially, if any miner or group of miners controlled 51% of the overall hash rate of the Bitcoin network, they could then have unfair advantage and start determining the future blocks transactions as they see fit.
And the hash rate is just a compute, right? It's like the chips going to work.
Yeah,
whoever owns the compute.
How many math problems are being solved per second. And so the numbers now, I was just curious in terms of just the CapEx that would need to happen in order to mount this type of attack. And so I was playing around with AI just to see some numbers here. And so the rough numbers is that they would need to take over. So there are specialized chips that are used just for a Bitcoin mining. Back when Bitcoin started, you could just mine it on a laptop. Then you had to use graphics cards. And after a few years, that was also unfeasible. Now you have to use specialized mining machines. And so to mount this type of attack, it's estimated that the overall CapEx in mining machines and power infrastructure and all of that would be about $70 billion of CapEx to do the attack. And then you're running at about $13 million a day in electricity. So that's not too crazy necessarily for a big country like, China or the US or whoever. But the more important thing is because it's on the chips themselves to be able to get that many mining rigs, given the current production, you would need to take over 100% of the chip production for around 4.5 to 5 years. And so if no new mining rigs were like coming to market for that long of a time, like there'd be a lot of time for people to realize that like something is rotten in Denmark here, that something's going on. The reality is the chip fabrication is a serious bottleneck. And even with the 51% attack, the economics definitely don't make sense. So it would have to be a state actor because you're going to be spending more than you're making. You can capture the block reward if you're able to determine the future blocks, but you're still going to be losing money because you're going to be earning less in Bitcoin than you're spending in power. So it's really a not very realistic thing. There was actually a very important time right before China, I think it was maybe two times ago when they banned. China's banned mining like 50 times or something. But there was a time a few years ago where they kicked all the miners out, ostensibly. That was a big change for the Bitcoin network. But a lot of us breathed a big sigh of relief because China, I don't know if they were very close to having 50% of the hash rate. Maybe, I don't know. They were extremely close. I forget the exact numbers. And so once they did that, they basically held the keys to the kingdom and maybe didn't realize that. And then they just like threw them away. So that was a very good moment for that. And then since then, Bitcoin has grown a huge amount. And now it's really not a feasible attack.
Why do you think so? That's wild. Like what? Because I find it hard to believe that a state actor like China, who seems to be pretty tech savvy, they wouldn't understand the advantage they would get from having that much of the hash rate. Like what would like help me? Like why would they do that? Just throw it away.
Reading into the mindsets of the CCP is not something that I can really do. They already have complete control of the money within their land. And so I don't like controlling Bitcoin. It's something that's really outside of their world. And I don't think they really like either they didn't realize the advantage or they didn't think it was a big enough advantage for their current goals. I can only speculate. But
and just to rehash the advantage would be that if they had 51% plus of the hash rate, they would get to decide which transactions are prioritized over the others. Correct?
There's two things here. There's like having 51% of the hash rate, and then there's abusing 51% of the hash rate. So if you just have 51% of the hash rate or more, then yeah, you get 51% of the blocks on average. And so if you have some sort of whitelist or blacklist that you're working with, you can kind of decide what transactions are going into the blocks that you provide to the network. But if you have, when people usually talk about 51% attacks, it's the scenario where because you produce more than 50% of the blocks, you can produce a blockchain that excludes everyone else that's mining. And so you can just kick all the other miners out, and it's only your cartel of miners and your chain. So just to backtrack a little bit, the way that Bitcoin nodes sort of come to consensus on which blockchain should they follow, they look at the chain with the most work. So if you can provide a blockchain that has the most work, then the nodes are just naturally going to follow your blockchain. So if you have 51% of the hash rate, then you can decide like, oh, I'm just going to ignore all the blocks that are from any other miner that's not in my cartel. And I'll still have more than enough hash rate to convince all the nodes on the network to follow me. So you can censor other miners, and then you can control what transactions get into the block. It doesn't mean you can change the rules. So you can't change the rules. You can just censor what transactions go into a block.
And you effectively hoard a lion's share of the fees and the Bitcoin that is mined by doing that. You and your cartel. Is that fair?
Yeah, but then it's like, what value is it? Like if like people see Bitcoin as valuable because it's decentralized. So if you own 51% of the hash rate and you start abusing it, then the value of Bitcoin is going to go down. So you're like harming your own
asset. Yeah.
Yeah. So you have to do it. You would have to want to do it as an outside attack, as in like it's a sunken cost. Like you're going to burn money to destroy Bitcoin. Not like you wouldn't do this to take over the network because there's an economic advantage. You're doing it to destroy Bitcoin.
So like in theory, if Xi Jinping watches this podcast, right, which I'm sure he does, he watches this podcast every day. I'm kidding. So he will go on.
Maybe he's a Tesla bro. You don't know.
Maybe. Shout out. They have a pretty big Tesla factory over there. You know, they do seem to like Teslas. But all joking aside, so in theory, if the United States ends up adopting Bitcoin very heavily and the Chinese ban it, in theory, they could be like, okay, it seems like the US and the West is really liking this Bitcoin thing. At that point, they could be like, all right, let's see how much, like, let's put a state attack behind trying to harm Bitcoin. Let's get 51% of the hash rate and just start just destroying the value of Bitcoin. But on the opposite side, the West would see that and they'd be like, fuck you. We're going to protect our asset, right?
You could,
and they'll fight against it.
Yeah, chip making is also a bottleneck. Like you have to.
This is very true.
The chips, so you would have to confiscate. I mean, you would either have to confiscate existing mining equipment or produce new mining equipment, and it would be an arms race. But it would be like the most peaceful arms race that ever existed because you're just building computers that do math problems.
Yeah.
So
which in theory, and the more hash rate there is, the stronger the network becomes, the more transactions that can't be done, which means stuff gets settled faster and more people can access the network.
Well, no, it doesn't. So there is the difficulty adjustment. So like even if you do increase the hash rate, the blockchain will speed up. It'll speed up temporarily, but then it'll adjust over time so that it sticks to that like 10 minutes on average per block. Got it.
Fascinating stuff. So it'd be like similar to the AI arms race that we have going on with chips right now. But like you said, it's like it. But this is to see what group can protect the value of Bitcoin versus those that are trying to harm it. It's like we're trying to prevent from debasing our currency or ruining or debasing the thing that we're using to back the value of what we're. This is like I don't know how to say this properly. We're trying to protect the thing that holds value for us versus somebody that's trying to diminish that. So it's like no different than China trying to go to Fort Knox and stealing all our gold, but or showing that we don't have any gold in there. Depending on what conspiracy theory you have.
And so that brings up us kind of back to the original point of Bitcoin being for enemies. So yes, we don't necessarily like that BlackRock has a ton of Bitcoin, or that MicroStrategy has a ton of Bitcoin, or whoever, or that the US government may at some point be buying Bitcoin in a strategic reserve. But we would still be happy that if China started doing a 51% on Bitcoin, you may want BlackRock or the US government on the Bitcoin network side at that point.
Got it. Okay. Interesting. What else is on your list, Constantine, that you want to hit?
Yeah, let me take a quick look through to see if there's any good topics there.
Sure.
While he's looking through that, I just want to bring up a cool thing about Bitcoin that most people probably don't know about, is that we have like a whole other layer of doing financial transactions. So I would say, 10 minutes on average to settle a transaction is not bad, but sometimes that can be a little slow. So we have this whole thing called the Lightning Network. Have you heard of Lightning at all?
Yeah, I think so. Yeah.
So we have this like secondary layer that operates on top of Bitcoin. So you can think of like Bitcoin as the base layer, and then we have the second layer on top of it, where we do these transactions that are called off-chain transactions. And it's sort of like having a bar tab where it's like, well, we can settle and we can make a formal transaction that goes on chain and settles our balances between each other. Like I owe you whatever. So we'll make a transaction and I'll pay you and we'll settle it. But if you have sometimes you can have a tab and you just have this like floating tab where it's just like, okay, well, you owe me X amount of money, but we don't have to settle it just yet. And typically those operate on trust. But we have this thing called Lightning Network where we actually can have these sort of bar tabs between people that are done in a trustless way. So you don't have to like trust that a person's going to pay you. You can actually invoice me and I can pay that invoice. And then you can get this payment, or it's like a guarantee of a payment, but you don't have to settle it right away. And so we can kind of go back and forth with these off-chain transactions. And if at any point we have a disagreement and you say, I'm done doing business with you for whatever reason, then we can always just, wherever we currently are at with our tab, we can just settle it and go on chain. But as long as we're doing business with each other and we're still cordial with each other, we can just pass these transactions back and forth and they're still good. You can still take them to the ledger on chain and settle them if you want to. But in the meantime, we can actually exchange these transactions back and forth like very quickly, just speed of light. And so it's called the Lightning Network. And I wish this graphic looked a little better. But yeah, if you go to the mempool.space website, there's this little lightning bolt. And this might look better like on your computer than on the TV.
Sure.
But all of these little dots are lightning nodes. And so they're nodes that are connected to the Bitcoin blockchain, but they're also doing this Lightning protocol. And it allows, so all these nodes are talking to each other, and all these lines, I believe all these lines are channels, so that these are the bar tabs that these different nodes have with each other. And yeah, so another cool thing about Lightning is you can actually chain bar tabs together. So if, like, let's say I do business with my bartender and my bartender does business with another guy that's also a barber, I can go to that barber and it's like, well, I don't have a tab with the barber, but I have a tab with the bartender and the bartender has a tab with the barber. So I can actually pay the barber through the bartender.
Interesting.
We can swap our tabs around.
Okay.
And so Lightning allows you to do this sort of routing payments between each other, and they happen instantly. And so like if you're in the Bitcoin space, like we use Bitcoin all the time, but we actually use this secondary layer called Lightning in order to do instant payments, where payments go through instantly and you don't have to wait 10 minutes or for a block to come through, or maybe an hour if you want like 6 confirmations, you want 6 blocks to go through. We just do payments instantly. And so that's kind of like the new thing that we're on.
So let me ask you a question. So yeah, this is super cool. So does it, so as we have that bar tab open, does it still make sure that I have the Bitcoin to pay you? Or like, let's say we go to settle, could there be a situation where it's like, oh shit, you don't actually have the Bitcoin to pay me with? Like, what the hell? Can that happen?
No. So everything is linked on chain. So when we have a tab open, we basically point at Bitcoin that we have on chain on the ledger. And we're signing these transactions that go back and forth. Like, I promise you to pay X, but we can replace those transactions. So it's like, okay, well, it's like signing a check, and this check promises a certain amount of money to you, but you don't have to cash it. And maybe you want to buy something from me, or maybe I want to buy something from you. We can basically tear up that check and write a new check. We could just keep doing that. And then up to the point that we decide, okay, I'm done doing this, I want to settle. Then you just, whatever check you're holding, you just take that.
You just take that. And the Bitcoin will always be there for you to claim that I owe you. Like there's no there's no instance where on the Lightning Network you and I can go back and forth, and then in the meantime I'm selling my Bitcoin, and then my Bitcoin goes to 0, and then I get all the goods from you that I wanted, and then to settle the thing in the Lightning Network, I actually end up owing you like 100 Bitcoin, but I have 0 Bitcoin in my wallet. Could that actually happen or no?
No, because like what you're passing back and forth is actual Bitcoin transactions.
Got it. Okay.
So there are transactions that point to Bitcoin on the ledger and that you can actually take to the ledger at any time.
Gotcha. Okay. Got it. Okay.
And so in practice, when you're using Lightning, you may just have a Lightning wallet on your phone, or they even have cards that you can use. And so you can get that very close to an Apple Pay style payment experience if you're at a merchant that accepts Bitcoin Lightning. So cool. I think that's a pretty big unlock as far as the usability side goes. Looking back at the list of things I wanted to talk about, one thing that you were talking about with CERN is like the debt that your son is born with in the US system, or, any country that is, has huge debt going. I hope you've seen through, going through a lot of these examples that Bitcoin really is quite strong at what it's meant to do. And a lot of times what happens is, as you start learning more and more about Bitcoin, you actually start to become more optimistic about the future. And you start to instead of being nihilistic and depressed, you actually have a little bit of hope, and you have you're looking out farther in the horizon towards the future, because you don't have to worry so much about preserving the value of what you've already worked for. I think that's a pretty important point. And it's something that sort of just seeps in the more and more that you're getting into the Bitcoin space.
Yeah. It's the US government's going to print $2 trillion to go to war.
Yeah.
Sure, bro.
Cheers.
Whatever you want to do.
Love how he's pouring a Jameson as he's saying that. Cheers to that. That's awesome. No, that's a great point. I mean, and I really do think, the thing that's been always in my head lately, it's there's just so much change happening so quickly. And it seems like that change is accelerating. And it feels like a lot of our systems in place, the bureaucracies that we have, the governments that we have, the social contracts that we have in a lot of different ways, the way corporations run, the way education is, all of it feels so legacy. It feels like it's not equipped for the world in 10 years at all. It's equipped for the world from 50 years ago. And in the next 10 years, the world's going to be completely different. So what are we doing, you guys, right? So it's stuff like Bitcoin, stuff the positive sides of artificial intelligence, a lot of cool technology that's popping up everywhere. There is a lot of different things that's happening that makes me hopeful for the future. But I really do, I think there's always this concern about okay, but are we sure that it's ending up in the right hands? Are we sure that that people with the right intentions are using that technology? Can we trust these corporations to really execute these technologies? But what's really unique about Bitcoin is that it really is designed. It seems like it's designed from the ground up so that no one player or no one group of people can control it. Because by default, that means doing something so unbelievably unorthodox that it will end up cratering the value of the thing you're trying to take hold of anyway.
Exactly.
Right? So,
exactly. And in the early days, I mean, it was not a guaranteed thing at all. And so while some people were really pushing for that global adoption that we're kind of seeing now, in a lot of ways, Bitcoin wasn't ready yet. It wasn't strong enough yet. And so a lot of us are happy that it did take this long to at least get to this point. Some wish it were even stronger, but I mean, it's pretty freaking strong, as we can tell by the current hash rate. And, you know, like we had a point when China could have done 51% attacks. And so it's Bitcoin is definitely an anti-fragile technology. Like I don't know how familiar you are with the whole anti-fragile Nassim Taleb thing.
Yep.
But it certainly is that, as we saw, like from the fork that he was talking about with Bitcoin Cash, like part of that also helped get the Lightning Network to become a thing, because we did realize that, okay, yeah, payments are an issue, but we don't necessarily want to make the blocks bigger. Like, how should this actually be dealt with? And now we have Lightning, and Lightning's awesome. And so it's because of those attacks that Bitcoin has learned from them and become stronger. But it was not necessarily a sure thing. As time goes on and it grows exponentially, it is way, way, way harder to kill than before. And it's only getting stronger as, you know, different nation states get involved, different players get involved, new technologies get built for the scaling issues. So it's definitely an exciting time, and it does seem like there's a very bright future ahead.
Yeah. I think honestly that's probably the best place to end this podcast, because I definitely want to get you guys back in the future as this. Like I view it seems obvious to me that the trajectory of Bitcoin is probably, again, not financial investment advice to anyone listening, but it feels like we've reached a critical point as an outsider looking in, where it's been around for 15 years. The bigger it gets, the more popular it seems to get. Now you have nation states and corporations looking to adopt the technology, and then the technology fundamentally is uncontrollable by any one of these organizations or individuals because of how it was designed from the very beginning. And so they are instead of the corporations or the individuals controlling this thing, they are choosing to piggyback on it as the foundation of how we're going to store value as a species. That's what it seems like to me. I could be wrong. You know, I could be naive and be like, well, you know, there's a plan. BlackRock, they have a plan. They'll figure something out. But so far, I haven't been able to identify what that could be. And so I really want to thank you guys for your time to hop on and help me and my audience understand this a little bit better. Let people know where, you know, if you want people to find you somewhere, if you have something you guys want to make sure people are aware of. Constantine, you go first, and then Topher.
Yeah, I've got nothing necessarily to promote, but I did want to give a shout out to Pleb Lab. They're hosting us for this podcast, and Topher's working out of here all the time. And there's a lot of great Bitcoin builders here. There's some events going on next door at the Bitcoin Park a couple times a month. It seems like at least something going on all the time. And yeah, that's my main shout out.
All right, Topher, what you got?
Well, for me, so I'll just go down like a short list. So you can follow me on Twitter or X as a BTC Tech Support. Very easy handle.
You right now.
Yeah, I work out of Pleb Lab, so shout out to Pleb Lab. If you're looking to get into Bitcoin, try checking out a couple different Lightning wallets. Like I like to recommend Phoenix or Zeus. I think Wallet of Satoshi is starting to make a comeback too. So check it out. Oh, Cash App. So Cash App actually allows you to buy Bitcoin, and it also uses Lightning. Also Strike. So those are like a bunch of different Lightning wallets that you can use. And if you're looking for places to spend it, I just want to say a shout out to two sites that I use a lot. One is called the Bitcoin Company. And so they're a marketplace for gift cards where you can actually buy gift cards with Bitcoin. And it's a great place to actually like spend your Bitcoin. If you want to live on a Bitcoin standard, to be able to convert it into something that you can spend right away. Bitrefill is another marketplace for that. Also, like any merchant that accepts Bitcoin directly, they usually accept Lightning. Also, shout out to River Financial, because they're like a great company, and also Unchained Capital, which is in the building. They do Bitcoin finance, Bitcoin banking, and loans. And so that's all the shout outs that I have for today. Oh, and shout out to TapConf, Developer Conference.
There you go. Love it.
It's where they meet up and talk about, nerdy stuff.
You should wear like one of those NASCAR jackets with each one of those companies. You know what I'm saying? Just like people know. That's awesome. That's fantastic. All right, guys. Thank you very much.